Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar has shown hardly any momentum or any attempt, for that matter, to recover since Friday's breakdown and crushing the 60-day moving average at 71.90. It is assessed that with the downside reinstated, the given measured move holds towards a region of 70 cents and reassessed from there. Last week, the market bulls took heavy casualties after fresh evidence that the global trade tensions are hitting the world's second biggest economy. After China released its data showing that industrial output missed its expectations of 5.9 and came in at 5.4, while retail sales missed economists' forecast of 8.8 and printed an 8.1. Later today, we do have the Reserve Bank of Australia published its minutes of its latest monetary policy. It is expected that the market will not respond to this because I feel that the RBA will continue to keep rather tight-lipped on the minutes and therefore give little indication of how they're viewing. But do keep an eye out. If the market is a little bit more closer to the hawkish side, it may see a little bit of a response to the upside, but towards 71.95 to 72.30 should find resistance, and overall look towards 71.35. The market found a little bit of momentum overnight after the dollar index slipped slightly. The greenback overnight found weakness after President Trump once again turns to the Twitter and repeated his criticism of the Fed Reserve for its recent rate hikes. The Fed meets Wednesday and is widely expected to raise rates again. This will be Thursday at 6 a.m. Overnight, Trump tweeted that it is incredible that a very strong dollar and virtually no inflation, the outside world blowing up around us. Paris is burning and China way down. The Fed is even considering yet another interest rate hike. Take the victory. The Fed is supposed to be politically independent. Any evidence that it is or may sway by attacks from Trump and not hike rates could unnerve the global markets. Let's see what happens at 6 a.m. on Thursday. But for now, I'm holding the view down towards 112.60 and any advances to find resistance around 113.65 to 114.05. The dollar yen case took a very severe turn to the downside and failing to get to its target of 113.45 to 75, and with a cap seen at 114.20, is the market's looking back towards the downside. Taking out this minor support now, nearly at 112.70, could see weakness towards its base that was rejected 3 times at 112.15.20, which I do expect to see demand to return. So I'm not getting bearish at the bottom of the range. A little momentum came back into play for the pound, nevertheless still holding within this triangle and also the downtrend. I do expect to see further weakness. Overnight, the opposite Labour Party leader, Jeremy Corbyn, has said that he has decided to put forward a motion of no confidence in the British Prime Minister Theresa May following her decision not to hold the Brexit vote immediately. Along with this, Tony Blair also called for a second referendum. She said that he was an insult to the office he once held and the people he once served. But Mr. Blair hit back and said he was speaking in national interest and the interest of democracy. Still, the Brexit divorce is on March the 29th, 2019, so let's see what comes out in the next few days. But then we might see a bit of a quiet period as Christmas is only just a week away. If we do continue to see this down move, then I do expect to see the market reach its target at 124 and reassess from there. Gold jumped $10 overnight in respecting this level, or the rejection previously around 34, with the base around 31 to 36, and the strong advance from this black candle does suggest we could see further movement to the upside, with Concerns of global recession, along with political noise in Washington, isn't helping the US dollar as the market once again turns to safe haven demand. The stock market also fell very heavily overnight. Does give some concerns that things are getting a little bit blown out of context. So the market is, when it comes to Trump's uncertainty of the markets, in the dollar index could fall further with his tweets. Stock market, Brexit, and also oil falling 3% overnight could see further safe haven demand. And therefore, my target of 55.60 is still very much in play. And wrapping up with oil, well, as I mentioned, oil lost 3% last night and back to the 14-month lows after erasing near enough all the gains recently. With the market taking out 49.80, I am neutral, and I would rather wait and see how this pattern plays out. If it is a break of 49.80 and sustains and confirms, then we will see a move to $45. So do be very cautious of your trading and keep your stop losses accordingly to your risk management. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.